When people ask, what is money? They usually expect, I think, a simple answer: cash, coins, digits in a bank account, maybe. But none of those answers actually explain how money works. Because money isn't a thing you hold, it's a system you participate in. And I think until you understand that, most conversations about inflation, banking, central banks, or even financial crises will always feel confusing or misleading. In this episode 1 of the Prime Ledger, we're going to strip money down to its structure, okay? And we're going to keep it very, very, well, as mechanical as we can be, okay? Just the facts. So, why is it that the casual or the usual definitions fall short? If money were just an object, understanding it would be easy. Okay, you could point to it, you could count it, you could store it, you could do whatever you wanted with it. But think about how you actually use money. Okay, so when you get paid, no physical object moves. Okay, when you buy something online, nothing changes hands. When banks settle with each other, it's not cash moving. It's entries on balance sheets. So clearly, money isn't defined by its physical form. Cash, deposits, reserves, digital balances. These are interfaces, not the system itself. They're how money shows up, not what money is. Okay, to understand money, we need to stop asking, what does it look like? And start asking, what does it do? So the functional definition of money is this, okay? At its core, money performs one critical function, and that is it settles obligations, okay? That's it. Whenever two parties owe something, this could be goods, services, wages, debts, money is the mechanism that closes that obligation, okay? A promise can do that, but in the context of money, no, it can't, okay? And neither can intentions. Pure settlement, okay? If an obligation is settled, it's finished. If it's not settled, it's still a claim, okay? This distinction is really important, more than anything else, I think, because most of what we casually call money is actually credit, okay? A promise to settle later. Money is what ends the promise. And so we need to ask ourselves, why is money today a system and not a thing? Once you think in terms of settlement, okay, I think something becomes really obvious. Settlement doesn't happen in just one place. There isn't a single universal form of money that everyone uses the same way. Instead, the system is layered. As an example, households settle with banks. Banks settle with other banks. Banks settle with central institutions. And of course, we can't forget about governments. Governments settle really at the highest level. Each layer has its own form of settlement that counts as final for that layer. What works as money for you may not work as money for a bank. What works for a bank may not work at the system level. So money isn't a single object. It's a layered settlement system embedded in balance sheets. That's why the system holds together and why it sometimes breaks under stress. So money versus credit. Okay, what are the difference here? Okay, this is really where the confusion starts. Usually, credit looks like money. It moves like money. We use it like money. But structurally, it's different. Credit defers settlement. Money completes settlement. Okay, when you hold a bank deposit, you don't hold money directly. You hold a claim on your bank. That claim works because the bank is trusted, the system supports it, and settlement can occur when it's needed. So most of the time, this distinction really doesn't matter, okay, until it does. And financial stress is what happens when people suddenly care very much about the difference between a promise and final settlement. Money. And this changes how you see crisis, okay? Because if money were just an object, crisis would be about fear or even psychology. But if money is a settlement system, crises are about timing and capacity. Okay, who needs to settle now? Who can settle now? And of course, who can't? Liquidity problems appear when settlement is required faster than the system can handle. Okay, that's liquidity. Solvency problems appear when settlement can't happen at all. This explains a lot. Markets freeze before they collapse. Institutions fail, even with valuable assets. Okay, and interventions focus on plumbing, not prices. Once you see the system, none of this is mysterious. But we need to talk about why the public debates, I think, miss this. Public debates about money usually focus on printing, definitely spending. Confidence is another one, and I've even heard morality. That was a new one, but those debates float above the structure. Okay, in my opinion, they don't ask where settlement occurs. Okay, they don't ask who is guaranteeing it. Okay, who guarantees it? They don't ask what happens when timing breaks down. Okay, and I think that's why so much commentary feels heated and also unhelpful sometimes. Because without a structural understanding of money, it's easy to argue endlessly and understand very little. So let's go back to the question. What is money really? We know it's not an object. Okay, money is not an object. It's not paper. It's not digits. Money is a layered settlement system embedded in balance sheets, okay, designed to close obligations across an economy. That's one of my best definitions, okay? And once you see that, everything else, banking, central banks, liquidity, crises, they really start to make sense. So I want to thank you for listening to episode 1 of our Prime Ledger series. You'll see a description in the playlist of what this series consists of. It's different from the main series, and it's also different from the myth-busting series, okay? These are more evergreen questions that will always probably be asked. And so these are the questions that are very common and that we'll cover in the Prime Ledger. The main series is going step by step and with each layer of the system. Very more in depth, longer, but the Prime Ledger series is kind of a quick fix of things. So thank you for watching. Thank you for being here. If this video was helpful, post a comment, subscribe, like, completely up to you. Would love to have you as a subscriber. But once again, I'm Justin, and thank you for being here.